Episode 4, 8 days later. Alrighty then, welcome to Investors Desk. I'm Susan, and this is episode 4, Market Aware, Market Update, and like we said earlier, 8 days later. Why is that? Before we begin, let me go ahead and put your attention down below to the disclaimer. This is for educational and informational purposes only. I will be providing some stocks and some charts to look at, as well as some resources that you might want to put in your toolbox, your investor's toolbox for later research. So, with that being said, let's go ahead and move on. When I am talking about what happened on March 19th, which was 8 days ago, it was Powell speaking. Um, it was the FOMC, the Federal Open Market Conference. I believe that's what that is. Um, anyway, he talked about the high uncertainty in the market. And I have my notes right here because he's talking about soft sentiment. He's still saying that um, the market is strong or the economy is strong. However, there's soft labor to look at, but the overall message is that he's going to keep rates the same. Well, we have a lot going on because the executive order was signed yesterday that was actually going to put the tariffs on permanently or decisively, which means there's no more, maybe not, 25% to on Mexico, 25% on Canada, could be almost 50% because Canada is now one of our, I don't know, not good allies. Even though Canada's been an ally with the United States for years and years and years. So the overall economy is still somewhat strong. However, we'll get those numbers in April for March. But the numbers I really want to look at and pay attention to is April. So when we get into May and the confundery of all of this tariff business really rears its ugly head, we'll see. Right now, all of the car industry stocks are down, and we'll look at a few of them. Uh, the um, The signs of increased tightness is in the money markets, and that's if you're in funds, money market funds with your broker, CDs, things like that. Tightening actually means that, the interest rates may creep up a little bit more. Uh, Now, Powell did say that inflation has started to move up, and he said that it was due to the tariffs. So the trade tariffs. So we'll see what that turns out. Hiring is low. People are still concerned whether they can pay employees at the rate that they're deserved. Therefore, the person who was doing one job is probably now going to be doing two or three instead of hiring and getting someone into those positions. Right now, layoffs are low, and I don't know if you can call the federal cuts these employees that were cut um, due to the bull in a China shop. I don't know. They were told to leave, pack up. You remember how back in the day? I don't know if it is still happening today. Probably. Uh, the supervisor comes in, puts a box on your desk, and you know exactly what that meant. It meant pack up your and leave. And that's not funny at all. That's quite embarrassing. It's frustrating and hugely surprising to the person sitting at their desk after their performance rating was A plus plus. It's like, why are you handing a box to me? But anyway, that's neither here nor there. Now, however they're being cut out or cut off or excused from their position, it's due to performance issues. And when you go to unemployment and they look up why you were let go, um, and they see it's because of performance issues, your battle has only just begun because it's going to be very, very hard for you to even collect unemployment. You're just going to have to do what you can and be where you are. We are living, streaming live to Studio 1209. Thanks, guys, for being here. If any of this content resonates with you, please hit the like button, subscribe to the channel. It helps with the algorithms, and leave a comment, even if it's hello, hey, kind of like what you're doing there. Give us a thumbs up. And right there on the screen, I have my QR code, and it goes to my website. Still updating that. We're still working on rearranging the studio. That's why I'm blurring out wherever I am in my home. Um, but we're going to get there as well. All right, so that's everything. And let us just go ahead and move on to the very next thing. What I have scrolling down at the bottom today is the New York Times. Um, so every now and again on my RSS feed, I'll change it from the money market to uh, world news to CNN news. Today I have the New York Times scrolling on my RSS feed. All right, let's move on to the heat map. See what we got there. All right, so it actually feels like the market is kind of flat today. And I'm going to take a look over here. Yeah, it's a little flat today. And most of the stocks, it seems, are flat today. Um, Anything gray in the market uh, is like Microsoft, Facebook, or Meta. Um, when you're talking about pink, it's a little bit up. I mean, a little bit down, sorry. And when you're talking about a deep green, like Apple, it's up. And we'll look at Apple, we'll look at Google and Nvidia and Meta and what else we got over here. Anything in a deep red means that, yeah, they're kind of down one or more percentage points on the market. And my chart over here on Webull just changed. So let's go and look at Webull and see what we have going on over there. So now we have Disney down. I'm just going to click on it. And this is media and publishing. Fox is down. The market must have changed. If you guys look over here, this is live. We're actually live in the market today. The last two, three episodes I was doing after the market. I'm using Webull as my chart once again, and one very soon down the line, we will go over to my real broker, and that is Tasty Trade. Tasty Trade, uh, who is my real broker and whose uh, charts and platform I use to trade stocks. I hold my portfolio there as well as options. Right now, I'm not doing any options. The market is volatile. We'll check out the VIX. And this is live right here, guys. So when I say the market's flat, I mean Nasdaq is down like what, 5 points. S&P, 2, 3 points. The Dow is down like, you know, 95, 100 points. That's nothing to where it closed yesterday. All right, so let's go and look at a few real quick, and then we'll go to the charts. Webull, once again, if you haven't downloaded Webull, uh, then you should. And the next time I come on, I'm gonna make sure uh, I show you guys, or I have the paper trading account set up here on Webull. Now I do have one position here. I've sold a couple of stocks out of this portfolio. This is not my main portfolio. This is basically where I get all of my research. Um, and, you know, it works for the time being, but I go everywhere for resource and research. So, anyway, with that being said, let's take a look at what Disney's doing. DIS, not interested in Disney right now. I find it to be a seasonal stock. Dell, I was looking at Dell as a technology stock, and I think in the near future it might actually do something. It is an American company. Um, it's been on and off the market. It was public, it went private, and then it went public again. I've been looking at Kroger. Kroger's a grocery store, and it is in competition with Albert's. Now, at one point, Kroger and Albert were going to merge. However, that did not happen. Albertson, I'm sorry. Thank God, because we don't need more verticals in this market or monopolies. What we need is comparative, friendly competition in pricing. Because if everything is one thing, then they can charge us anything, right? Target has been the target of boycotts and other such blackouts. So I would not touch Target with a 10-foot pole. Neither would I touch Walmart with a 10-foot pole. However, when it comes to uh, pricing, Target is really at a good price. Now, once all of this crippity crap ends, uh, if you can get Target down below 100 and maybe put 10 or 15 shares in your portfolio and hold it, then you'll be okay. But Target has lost a lot of confidence and a lot of faith in their company due to their positions in uh, the DEI space. Still, now I do want to look at still. Um, and if we are really going to be getting into some infrastructure, there are several still companies that I want to look at. And I did put down which ones I wanted to look at. Uh, One portfolio outside of mine that I do manage is holding CMC, which is a commercial metals company. And these are mining companies. Uh, and for some reason, coal is coming up in my head, but I don't want to go there yet. Because it was mentioned a lot the other day during the uh, speech before the signing of the permanent tariffs that are going to take place on April 2nd. There is Cleveland Cliff. We're going to look at that. And there's one more, Still Dynamics, that we're going to look at. Oh, and then of course there's Nucor. So let's see. Freeport McMoran. I've been looking at this, and they've had their up and down moments, and I'm thinking, you know if it goes any lower than this, I'm gonna keep a watch on FCX. Alamos Gold is in my portfolio. Oh my goodness, you guys. Gold is like, it's over 3,000. Uh, Now, last time I looked at gold, it was around $3,066 per troy ounce. And what does that mean? That's like a bar of gold. That's around, I think, it's somewhere around 31 grams. And if don't be fooled by gold, because if you're talking about, I got gold, I got 18 karat gold hanging around my neck. Well, 18 karat gold is not pure gold. There, the pure gold is 24 carats. If you got 24 carats, you got pure gold. If you got 18 carats, you got 18 carats of gold, and there's some other metals in there. What they are, I don't know. I do not mine gold. I do not extract gold. I just know that at 18 carats, you have other metals in there. At 24 carats, you have gold. Alamos Gold is AGI and it is a mining gold company, just like Barracks, which the symbol GOLD changed. Their symbol changed. They went off the market, and here's Barracks down here. Between Barracks and Alamos, I don't know. I like Alamos. But I used to carry barracks in my portfolio a few years ago. No, stock I got out of quickly, and thank goodness that we did. Ended up selling over 500 shares of NVIDIA in pieces. So there was 300 shares that was sold at the highest that I saw NVIDIA, which was about maybe 2, 3 weeks ago. It was somewhere around 138 or 140 per share. So I got out of that quickly. Then it went below the other 200 shares. So I definitely had to wait patiently until it went back above my initial investment for those last 200. So each each exit I made a profit, and I was able to get back what I put in as well. So if you're underwater by a few bucks, well, at this point, this is not advice, but you might want to definitely continue to look at this stock, and be careful that it doesn't go too low where you're really. I mean, Nvidia is getting hit hard, even though it's a great company. Um, all of this stuff about building chip factories in the United States, that's going to take some time to build these factories and get the folks that we need over here. I still say that the cost of labor on this may be a little high because we're Americans, and we don't work for $5 a day. No, we don't. So whereas something would be cheaper to make overseas because there are millions and millions of citizens over there who are willing to work for a nominal wage per day. They're able to get things made cheaper. And, if you want to balance life out, well, um, that's probably mostly why companies go over there to get their stuff manufactured, and why, even though they pay 3 cents for something made, when they cross the border, maybe the tariff to import that was only 10%. Then when it finally gets into your store, something that costs 3% and 10% of that to get it across the border, they're going to charge you $20 plus tax, or $30 plus tax for a piece of wire. Who knows? I mean, we're talking Thailand, Korea, China, Taiwan. Uh, these are the places that are exploiting labor, but we're not going to go there today. Oracle, that just they just recently had their earnings. Oracle is a software cyber internet company. Um, Not sure if I'm interested in that. I used to have Southwestern Energy in my portfolio, and I thought for some reason, oh, they are right here. It says it delisted. Um, so it was delisted from the New York Stock Exchange, and this is probably why it's just black, and there's nothing going on in the percentage of Southwestern Energy. I did get out of that quickly, so it's not trading right now Here's a SPY. Bristol Myers Squibb. I'm still kind of interested in this company. It's in my watch portfolio. Advanced Micro Devices, once again, another chip company. When you guys get Rebull, this is a great way to quickly scan through stocks for um, the morning. And you can start scanning around 9 or 9:15 um, because, like I said before, if your broker allows you to do this, you can trade before the market, but nothing actually moves until the market actually opens. But as soon as it opens at 9:30, any trades that are placed will be the first trades in. That's why when you see pre-market numbers and they're down and then the market opens and all of a sudden you have this huge jump is because the trades are being placed quickly. Oh, and I mean, these are the first trades that are going into the market. So anything you do, you want to make sure the market has been seasoned. And by seasoned, I mean you as a retail trader or you thinking about trading and or adding or balancing your portfolio, you want to make sure that the market is seasoned. So there's this bam, bang, boom, first thing when the market opens. So you kind of want to wait and for it to settle down. And that's usually around 9:45, between 9:45 and 10:30. And then, you make a decision to do something or not to do something. And that includes whatever you're doing in your paper trading portfolio because now you're disciplining what you're doing as you are staying market aware and doing your research. All right, Airbnb. I'm actually interested in Airbnb, but I can't. I'm just gonna keep it on my watch list. I can't touch that right now. Mosaic, I'm stuck. I'm stuck in this stock because it's below what I traded. So I'm keeping my hands on it. Microsoft is down or flat, uh, being down, an eighth of or seventh of a percent, whatever, seven tenths of a percent. Okay, I think that's the way you say that. It's flat on the day, but it's in red because it's down. Morgan Stanley is a bank. Pinduoduo Duo, PDD. A lot of people like this stock. Um, I'm not crazy about it. I don't know. All right, here's some auto industry plays right here. We got Rivian. Um, I love the look of that truck, to be honest with you guys. I just can't do all electrical vehicles. If I do anything, it's going to be a hybrid. Right now, I love my Honda Element. Lucid, I don't know what's going on with that. The cars are pretty though. A lot of car industries. Hopefully, I might have GM and Stellanza in here, but they're all down as well. Lucid, I mean, I don't know who's investing in Lucid. Let's go down to Tesla and look at Tesla. Tesla's up. Hmm? But if you look at where it was up uh, before it opened, and this is what I'm talking about right here. Um, Previous close was 272. Uh, so, you know, uh, today's the 27th. It is 1 p.m. So we're looking at a 30-minute chart right now. If you look down here, it's 30 minutes. That's fine. So every bar is 30 minutes. So if we look right here, it's 10, 10:30, 11, and it was at its highest. Now right here, I think there's a little teeny stem right there. Over here is 11:30, uh, 12, 12:30 right here, and we're working in the 1 o'clock hour right here. So even though it was up at its highest, it's in the green right now. It's still doing its downward spiral. All right, so let's see what else we got. Uh, Now I was looking for GM. Here's another auto industry. This is definitely Chinese Li Auto. Don't know if they have any building going on in the United States, but that's good research. Um, Uber, interesting. Let's look at Netflix. Wow, I love me some Netflix. Can't afford Netflix. Here's Ford down here. Definitely a U.S. company, and I believe DVM is the last one. So we want to look at Stellanza. Let's go to our chart, and I believe Stellanza is STL. STLN. See? No. Hang, I can't remember. Stellanza. STLD. Let's try that one. Oh no, that's still dynamics. Okay. Well, let's go with GM because we're still looking at auto industry. Oops, didn't mean to whistle. Once again, what are we looking at? 1 day, 1 minute. This is a 1 day. Look at this gap inside of a minute. This happened at market open, guys. Look at that. So here it is before the market opens, and we have a candle here at 5 o'clock, 1600 hours, or yeah, it, it, 60. Oh, I'm sorry, 4 o'clock, because 5 o'clock is 1700. 4 o'clock yesterday when the market closed, it was up around $50. Let's see, it closed at, if you look at the top where it's, here, I'll just show it. That was the open. Oh, it's hard to show it. Yeah, if you look up here, when I land on it, let's see, the open was 50.89, the high was 50.95, the low was 50.89, which was the open, and it closed at 50.95. So it closed up 0.5% or whatever, however they do that. But as soon as the market opened, this is what happened. If you look down at the bottom, you'll see where it says 327, 9:31 a.m., like 1 minute after the market opened. Here it is, uh, down considerably. And this is where it's ranging right now. Now, if I go to a 30-minute chart here and 1 day, so 1 day, 30 minutes. Why is it doing that? Then we're just going to look right here because that's where that was. So here it is. Can I widen that? That would be nice. Um, See, I'm not that familiar. But anyway, there is your half hour. Your first half hour, that's 10 o'clock. Second one, 10:30, 11, 11:30, 12, 12:30, and we're working on the 1 o'clock hour here, and we're down. So it is affecting that part of the market. Alrighty then. Um, I'm looking for value and dividends in the market, and let's go to let's go over here and let's look at where were we? Let's look at where the Dow is now. All right. So we have some bigger moves. Last time we looked at the Dow, it was at 95, a negative 95. Now we're down a lot. So getting into usually around this time, trades are taking off before a 1 o'clock lunch. I'm just saying, look, I've been looking at this market for years and years and years, and this is basically the pattern. Folks come back and they sit down at their desk somewhere around 2:30, and they start looking at what they can balance their portfolio in. And I'm talking day traders. I am not a day trader, guys, and neither in this market. If you're new and you're just getting market aware, they're not going to let you day trade anyway. You have to have a margin account over $25,000. Most people who day trade have anywhere between 100K to 150 to 250K in their portfolio, and still day trading is super risky, super duper risky. So you really need to know what you're doing. Don't follow people that tell you to follow me, who are day trading and you're just getting started. That's just not healthy. Not healthy. You wanna grow your legacy, not throw your legacy away. All right, so here's where we are in the market now. Metals and mining. So we do have FEX over here. I'm still interested. This is Newmont. Now, between these two, Newmont is kind of one of my uh, favorite metal mining companies. Software services, the trade desk. Uh, Now I can change these if I want to. Diversified retail. And what does that mean? All right, so we're gonna get off the charts. Wait 1 second. I didn't look at my. Uh, well, yes we did. uh, Google. Let's click on Google real quick. Goog and Apple and Pfizer. Pharmaceuticals are down a lot as well. Zoom. I really screwed my portfolio up with Zoom. Uh, I wish it would get that high again. I find Las Vegas Sands to be another seasonal stock. Nobody's in Vegas throwing money away, hopefully. Block has become XYZ. I remember back in the day when we used to use that symbol for practice. We would call the company XYZ, or um, XYZ company sold ABC widgets. That's the way I learned it. But now we actually have a stock symbol that says XYZ. Sandal is one of your marijuana stocks. I definitely got out of that industry. McKeeson, Costco, can't afford it. CGC, that's another marijuana stock. And if you do want to kind of touch that industry, I would, if I were you, do one of the ETF funds. I believe MJ is an ETF fund for the marijuana stocks. There's another one out there, and I believe it's a holdings, not an ETF. Uh, so you would buy what this company's holdings are in the marijuana space. But I'd be careful with these. I got out of all of those, by the way. Um, so we did look at Walmart, right? And Kroger. Yeah, I'm going to have to put some Kroger in my portfolio. I think that's one way to diversify. All right. Now I gave another resource, and I don't want to make this any longer than it should be, and that is the sector spiders. If you are thinking about doing the paper trading, you might want to start with exchange traded funds (ETFs). I've gone through the sector spiders. There are other ones out there that is not um, does not follow the S&P 500. It kind of follows the overall broad market. And I'm talking about, uh, let me go here. Where am I? Oh, I'm here. Yeah. So let me do DIA, the diamonds. It follows the Dow Industrial. And instead of having, instead of trading the Dow, which nobody will trade, nobody's trading the Dow. But then again, you never know. I mean, you can put this in as um, an ETF. Then the other one is that follows the S&P is the SPY, and I use these to actually put on options, option retail trades. So yeah, right now 556 down. Of course, it's following the S&P 500, so of course the SPY is going to be down. The other one is IWM, which follows the Russell. These are iShares, by the way. This follows the Russell 2000. And then, what's the other one? Can't remember. Oh, dang, blast it. It follows, it's on the tip of my tongue. Follows the NASDAQ. Do I have it in here? No, I just have the NASDAQ in here. Anyway, we'll come back to that. All right, here it is. Bam. Select sector spiders. This is not iShares. This is the spiders. It's following the SP 500. But you have all 11 sectors over here, and it says it right now. And you can just quickly scroll through and look at what's going on, right? And it'll tell you what the price change is, and it should be live, unless it's not. Let's do this, and I just did a refresh. Yeah, I had to do a refresh because I had this up. So it's showing real time in the market. Now, let's go over here and scroll through. Come on, don't you want to scroll through for me? No? Why? Hmm. Don't know why it doesn't want to scroll through for me. Let's hit that again. But there we go. All right, now we're live. Okay, so communication services XLC, consumer discretionary XLY, and this is discretionary, which means luxury. You decide maybe not. Consumer staples are things you use on a daily basis, but discretionary things, like I want to go and buy something at Amazon. I want to go and buy something like a Tesla, and I'll show you that in a second. And there's consumer staples. It's actually up a little bit. I wonder why. Um, like who's leading that? Energy. Energy is down. Uh, Financials are down a bit. Healthcare, it's up a bit. Industrials, down. Building and materials, down. Real estate, it's down. Technology, of course, is down. Utilities is up a bit. And we're back to home. So if we go down further on this page, we can get a better glance instead of going through everything. I took you through that when all you had to do was just do this. But this is what it's saying that's happening while the market is open. This is why you want to evaluate funds once the market is closed. Now, let's look at discretionary real quick. And what you want to do is scroll down and see, and it's probably up because the holdings, like the top 10, and there are more than 10 holdings inside the discretionary. They go by the percentage of shares that they hold in these funds. So, consumer discretionary does have Tesla in their fund. Why? Because it's a luxury, right? So, let's look at the holdings. See, now the other day when I tried to put this up on Tuesday, I put some music in that YouTube did not like. So I was not able to edit. I was not able to um, change it. So I just deleted the whole thing and said, when it gets towards the end of the week, and I said at the top of the week on Monday when the market skyrocketed, I said from here it's going to go down. Now, Friday, we might see a balancing of it going up, like that's tomorrow, and leveling off, but not really hitting the high that it did on Monday. I don't know anything. I am not a prophet, but that's just the feeling of how the pattern of this market has been going week to week. If we start out with a red day and we're going down all the way, that means we're crashing for a week, and they're going to compare that hold down week to the last time the market had a hold down week. And that could have been back in January, or it could have been in December of 2018 when we had this little mini crash. I don't know if anybody was around, but I was. And yes, during 2020, when the market had its moment due to that particular period of time, March 2020, stocks were just, I mean, it was like King Henry VIII eating a turkey bone. It was yummy because we knew that there was an incident that affected the market, and everybody jumped into the pharmaceuticals, and so did I. Of course, I was just feeling a little greedy back then, but I also jumped into a lot of different technology stocks and retail stocks that I knew had great multiples, great revenue, great income, low, and then this is what you want to look for: low inventory and great uh, net income, which means they weren't underwater, they weren't in the red. There was nothing wrong with the company or the stock price. It was just the market. It was the time. So anyway, uh, Tesla was in the first position. So they're always balancing um, the, uh, these portfolios and their holdings. So right now, Amazon is topping out because um, they rebalanced it. I can't. I'll have to figure this out. Why the weight of this is bigger than the weight of Tesla. But then Tesla is so volatile, that might have something to do with it. Speaking of volatility, let's go back here to the chart real quick and look at what the VIX is sitting at right now. Yesterday it was at 20. Uh, and it actually went down to 18. Uh, and now let's see where it is sitting, and the VIX is at 18. Now, I already told you what the VIX is. It measures the sentiment of the market, whether the market feels risky or it's giving us a reward, which means complacency. Right now, uh, look over here. This was at the top of March or mid March or the first week of March, going into the second week of March. Volatility was super high. And I do believe that was around the time when there was a lot of um, wishy washy talk about tariffs. And just before the FOMC uh, speech that Powell gave. So uh, we're going to say that right now we're not complacent. Anything over um, I want to say 15, 16% um, is, the market's like, I don't know, I'm not sure. Definitely anything over 20. But if we're looking below 16, and I would even say somewhere around 13, 12, 13, somewhere down here, I would say that uh, the market has adjusted, it's complacent, but real complacency in the market it's at somewhere around 9%. So you don't want it way up here and you don't want it way down there, because there's nothing to trade if it's way down there. And way up here, you could actually in options um, get uh, a high um, IV. See, I'm getting too technical, but if a stock has a high IV and you're looking for it to come down, usually that happens in an expiration. But we'll pass on that for now. But anyway, just I just wanted to check what the VIX was doing. So here, down here are your holdings, and you do have performance distributions. You have your different charts that you can look at, documents and news on these different things. You can do a month or quarter, and generally every quarter is going to give you an earnings report. So down here it'll let you know what the returns are. Um, and then I do believe some of these, yeah, the dividend details. Uh, and you can, look at what the dividends are for each one of these. So that's that. Now, one last resource, and then I'm out of here, guys. For real, for real. And let's look at this one here. Uh, let's go back to here. Zax. Now you pay for Zax, but it's a research. You can do the free one. Let me see. Oops, I did that wrong. Let's go over here. See if I can make it bigger. There we go. And of course, if you do this without paying for it, you're going to be clicking off on some ads, just so you know. Now, I did look at U.S. Steel here. This is a great resource. It pops up with some interesting things here. I guess this is sponsored by Charles Schwab, which is like taking over the market. Yeah, I told you about Schwab. I called it Schwartz back in one of my episodes, and I corrected myself. Hopefully, that episode went up when you heard that. Um, but yeah, just to recap, when I first started, I started with Options Express, and then I started learning how to trade. Then, in my trading education, I went to Tasty Trade. And that's when I left Options Express because Charles Schwab took over and they were charging in and out fees, which was greater, I believe. I can't remember. Than what it was $14.95 to get in and $14.95 to get out of a trade. So no, I wasn't even swing trading back then. It was called serious position trading, uh, like 2 3 months, so that I could make sure I did make a little profit, so that it would cover that $30, right? Um, and I did start out paper trading on Options Express. I enjoyed that platform. I found it very informative. And so I left that platform and I went with the platform that Tom Sosnoff, who developed Tasty Trade as well, um, was uh, uh, built Thinkorswim, which was bought by TD Ameritrade and now Schwartz. Sorry, just kidding. Schwab. Now Schwab owns uh, TD, and they're keeping Thinkorswim as well. But because I'm over at Tasty Trade, I am on the Tasty Trade platform, and I'll leave a link for that below too. Webull, Tasty Trade, Zacks as a research piece. These are all researches. So yeah, you want to know something about a company, you can go over here and Zacks will tell you about the company and it'll tell you why they think it's a value stock as opposed to a growth stock. And it'll tell you some industries. It'll give you, what their status is. Um, Now, as far as a growth stock, they're calling the score an F, which is wow. So no momentum, no big, huge bangarang in U.S. still. Zacks, great resource. Gets into some funds, some ETFs. You can look at that. It even has an ETF scanner. We'll go through this a little bit more. It even has an earnings calendar. So let's check that out real quick. See what earnings were. We can't do before market, so we would have to do what's happening after market. And today is 27th. Oh, we got Lululemon reporting. And it has reported, obviously, it's checked off, so it probably reported early this morning. Walgreens reported. We're not going to go into that. But then let's see who else is important in this market. Uh, Please wait. I believe I used to have this in my portfolio. No, I didn't. Uh, so I don't see anything else that is of interest. Let's go back over here. And these are releases. Let's go back to the calendar. Bang, bang. And 74 earnings, 44 dividends, and there is a split. I wonder who's splitting. The company is splitting. Splash Beverage Group. Huh. Split factor 0.25 to 1, quarter of a percent to 1. What is that stock doing? Oh, stop. You're kidding, right? All right, we're not touching that, of course, with a 10-foot pole. Who even knows what that is? All right, let's look at what the earnings are. Major earnings on Friday. Uh, I don't see anything here that I would be looking at as a major earnings. Lithium, mm-mm. SBC Medical. Usually, if it's a top company, it'll be in what is this, like the top 10 or 20 earnings to show. So if I page over here, see what we got. Anything, 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 anything. Nada. All right. Um, let's see. Dividends. This is a good way to look for. Here's Dix. Uh, Now Dix is interesting. This is their dividend date, March 28th. Oh, it's coming up tomorrow. but it's paid out on April, April 11th. What's Dick's doing? Hey, hey, it's an expensive stock. Dick's is up. Wait, let me stop. Okay. That's everything, guys. I think I'm out of here. I think I'm done. This is all we need to know. Yeah. Let's get out of there. All right. So I'm way over. Look at this, an hour and 5 minutes. But I think I had a little fun doing this. Remember, it's Thursday. We're in the market. It's 1:30, and I'm gonna just take a quick peek to see where the market is sitting right now. Um, and the Dow is still down 200 points. The S&P is down 23, and the Nasdaq is down around uh, 87, 88. And that's everything. I'll see you guys next time. And I don't want to. Oh, we're gonna try some Weeble paper trading. Why not? Alrighty. So let's do it and do it and do it.